Hi there, you're watching some breaking news right now. It is earnings time and HDFC Bank, the largest weight on the Nifty as well as the Nifty Bank, just come out with its third quarter numbers, and prima facie looks like there is a beat on the net profits. As far as our poll is concerned, the company posted a net profit just above 7,400 odd crores, and we were working with a number of just around 7,000 crores. We also had the asset quality numbers up for you on your screen. Close to around 1.42% is the gross NPA, a marginal worsening if you must quarter on quarter, and the net NPA as well 0.48% versus 0.42%. Looks like the net interest income may have been below expectations, but we have Abhishek with us to detail what's he made of these numbers prima facie. Abhishek, we had a handful of details for HDFC Bank in their pre-quarter update, but from the incremental data that's come by, what do you make of these numbers?
The numbers, the NII is a beat. There is slight deterioration in asset quality in absolute value. So the gross NPA in absolute value is up by 7.4% quarter on quarter to about 13,427 crores. However, the net NPA is much higher at about 17.9% growth sequentially, which means that despite them making a provision of 3,040 odd crores, which is again up 13% quarter on quarter, it looks like the PCR or the provision coverage ratio must have declined, and as per my calculation, the PCR must have declined from 69.7% to about 66.7%. so a 300 basis point decline is seen in the provision coverage ratio, which is not a good sign.
Alright, we also have Ravikant Bhat with us joining on the phone line to detail those numbers. Ravikant, you've heard Abhishek talk about the basics as far as the numbers are concerned. Looks like there is a bit of a miss on the asset quality. They've increased their provisions, and the fact that that provision coverage ratio may have gone down by 300 basis points. What do you then make of this quarter for HDFC Bank?
Yeah, I missed the profit number. If you could just tell me what it's
7,416 crores is the net profit. We were working with a number of close to around 7,000 odd crores.
Yeah, so I mean again, I was working with a profit number of 71 billion. So clearly, it seems to be a beat on the profit. But I mean, coming to the NPA number, which I think is also pertinent. The NPA number for us, it's been better than what we were expecting. So HDFC Bank typically Q1, Q3 tends to throw up seasonality, and in that sense, we actually were expecting the numbers to anyways deteriorate a bit. But in absolute terms, the number has indeed, turned out to be slightly better in about and on the ratios. I think net NPAs are fine. I mean, at 4.48, we were at 47 basis points, and the gross NPAs seem to be about 4 basis points better than our estimate.
Right. You have any incremental details, Abhishek?
See, the net interest income is a miss. They are gaining market share at the cost of yield or the pricing on products. So we have seen the robust, loan growth, which has come in a tad below 20% YOY and about 4.4% quarter on quarter. Quarter on quarter, the growth is healthy. Why? Because in Q2 also, the sequential loan growth was at 8% when compared to the Q1 numbers. So on a high base, the growth is good. They are giving up on the yield front, and they are gaining on the fee income. So against a 4.4% quarter on quarter loan growth, you are seeing a core fee income growth of 11.7%. So what does the fee income mean? Just to explain our viewers, is that when you take loan from HDFC Bank, they also charge you a bit of fees for processing fees or other fees, which is the core fee income. So while they give you the product at a lower rate in terms of the pricing of the product, they also charge you a fees. So they are giving up on the yield front, but they are making up on the fee income front. And on the asset quality, I would like to speak one point. The absolute value has increased by 7.4% quarter on quarter. We were working with a slippage number of about 4,500 crore, which is estimated by Phillip Capital. Last quarter, the slippage of formation of bad loans was at 3,714 crores. So despite the increase in gross NPA, the net interest margin has remained stable at around 4.2%. The only flip side is the 300 basis point decline in the coverage ratio.
All right. We also have Siddharth Purohit, who's the Senior Equity and Research Analyst at SMC Institutional Equities, joining us on the phone line. Siddharth, you've had some time to look at these numbers right now, go through the asset quality, etc. What do you make of these numbers, and what do you think the street would read these numbers as and tweak their estimates?
Yeah, on the bottom line front, certainly on the higher side than what we expected. We expected a profit to be close to 7,000 crores, so a little higher on that front. When you're talking about asset quality, obviously there is some bit of rise in GNPA and net NPA, but let me tell you that even in last quarter, in absolute term, there was a 740 crores rise in GNPA. That was 6% quarter on quarter, and this quarter also it is 6% GNPA increase in quarter on quarter basis. And in absolute term, again, roughly that 750 crores. So not much of rise in asset quality as such, or deterioration as such. There's a bit of drop in PCR, as you rightly said. It could be like Ravikant also was mentioning. Normally this quarter you always see some seasonality, so and that might get reversed in the coming quarter. So maybe that's why they may not have done additional provisioning. So not to read too much into that asset quality front. And on the growth front, obviously they already had published their provisional number, and which was very encouraging already. So I think market will take it positively. There is nothing as such negative outcome as such visible from the number. So I'm okay with the number. I think positively market should react to the stock.
All right, Siddharth, thanks a lot for giving us your views on that. Ravikant as well as Abhishek for joining us on this quick earnings central as far as HDFC Bank's numbers are concerned. Thank you for tuning in to this programming. Keep watching CNBC TV18.